is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the previous week. And we'll also plan for a bit of trading for the upcoming week that's starting tomorrow, Tuesday, April 15th, 2025. Let's get to see the charts first. So this is a bird's eye view of Nifty weekly, as well as right side you have the daily charts as well, and you see that the price has been moving between two trend line channel, and then there is another parallel channel that was about to hit the bottom of the channel, and quick reversal had happened. Very wide range bullish candle is what you see reversing from the bottom of the channel on a weekly basis. On the daily charts you can see that small piece that you see on Nifty here on the daily charts, that's the parallel channel, and you see a similar sliding down and then a quick reversal. So big drama is what had happened because of the Trump tariff trade war that could go throughout. So that's exactly what happened. Banknifty, the ascending wedge bottom reversal, you can see that in the Banknifty. On the daily charts of the Banknifty you see the same with the big fall and the big recovery, almost complete recovery in Banknifty as well, almost. So that's the story. So basically market ended flat, 0.32, it's just 73 points down on Nifty and 1% down, negative close on Banknifty. But the kind of moves that the Nifty made and Banknifty made was horrific, very hard. Billions of dollars got lost in the last 2 weeks alone. That's following the Trump tariff declarations, but kept the market in uncertainty as to when is it stopping, when is the final tariff. So market dislikes uncertainty, and that's where the market crashed down. When there is clarity, the market starts to recover and slay sideways or moves back. All right. But uncertainty is something that exactly happened in the last 2 weeks. So 5% of Nifty fall, that's big. That's big. 1,000 points plus 1,200 points lost in a single day. Monday came down and then quickly reversed, and finally ended flattish down. 73 points only lost, but the new correction low is 17.23. But we had a 72% rally from 2022 onwards. So that was the correction. Last correction was more than 18%, so still not that bad. Banking index, the correction has not happened much. It's just 12.5% last correction. Banks always during the last several months has been showing more strength than the Nifty banking index, and the final response is what lost last week's drum, and it's still above the 200 exponential moving average, but Bank Nifty is struggling to close above the 20 exponential moving average. Right. So that in a brief. So I have some running notes, and excuse me for my sound. And candlesticks and patterns. If you see, this is what it's a very wide range bullish green candle that you see in Nifty and Banknifty, right? Definitely bullish, but it has not managed to climb above that shooting star pattern, which is very negative. So unless it moves above that, we can't say that going forward it would be bullish. It has to go above that, about 24,000 for it to be, for it to turn back into complete bullishness. And then probably the consolidated list, but for the fall from here, as much towards the low of that is not a likelihood, given the ferocity of the buying that happened from the bottom, technically. And Nifty also very wide range, but it managed to close above the previous candles high or even close or open. So that's very strong recovery is what we can understand from weekly candle, but daily will tell you the story. Monday gap down, truncated week, and then gap up. Yeah, Thursday was not, Wednesday was working, so it didn't gap up, but after the holidays it gapped again. So very quick solid recovery is what we can see. A V-shaped recovery, very volatile. Traders especially have tough time to place the bets when market moves like this, without giving any clarity on which is the direction of the market. Same thing happened in the Bank Nifty also. Go down, did a V-shaped recovery, right? Only 4 days of trading happened last week. That's what happened. Well, the bands are showing sideways contraction. The bands are sideways on both Nifty and the Banknifty on daily charts. But bullish bias is there in the Banknifty about the median of the Bollinger Bands, but bearish bias consolidation is what is on Nifty. So it is sideways move is what you can see ahead short term. Right, so that's about it. Let's move on and see what happened with momentum. So momentum is sideways actually. In weekly charts of Nifty and the Banknifty on the left side, and daily charts of Nifty and the Banknifty also, it's sideways rising. So sideways rising and sideways falling is what medium term, short term and medium term momentum is all about. But the trend has not fully recovered. It's still bearish. Right? That's what trend indicator is talking about. Momentum is based on the RSI. With 60-40 RSI is what is used for measuring the momentum. In the previous slides, what you will see. Right? And India wakes. That's where all the fear is reflecting clearly. Only 47% is the close to close spike that happened, and it's about 20, and that is high volatility. This is something we have to be very careful about in the upcoming weeks, which clearly tells us that the fear is still there. Trump has said one thing, reduced paused tariffs. Next day, markets recovered, but the fear is still there. So we have to be very careful about that. The kind of premiums that are shooting up for the options was beyond the control of any trader or any expertise or any kind of money. You cannot sustain. You just have to book your loss and cut out. 47% spike means some huge spikes in the premiums for traders or derivative market players. So a lot of the traders lost money. Investors also. So the erosions on all the investments that we made, the kind of ferocity of the fall, most of them might have both losses and then lost a huge amount of money. And across the world, the markets are down. It was not just ours, with least affected, I can say. So that's India VIX. The fear and liquidity index is still in the very high volatility range, and we have to be very, very cautious until it cools off towards the below 15 kind of medium volatility at least. Open interest on the Friday, the build-up is short covering, which is bullish in nature. Open interest on the options, however, the PCR is showing that it's bearish 0.8. It's not about 18.9 in the Banknifty and the Banknifty, so it's not about the one. So still considered to be bearish, although while the futures is bullish. So these are the options started for the April 17th Nifty weekly expiry and for April 24th Banknifty's monthly expiry. That's what they say. You can see the huge resistance that's built up near the 24,000. Oh, 23,400 is where that build up is. So the highest resistance is at 23,500, and after that 23,000. So 23,000 and 23,400 what oil. The 4 days of trading is there. That's what the levels of resistance where the highest call writing is seen. Put writing is in at 22,500 and 22,800, very close by within average. 50,000 and 51,000 where the supports are seen, highest and second highest put writing, and highest resistance is at 52,000 and then 51,500. So you also have a narrow range of 1,000 points. So you can see the highest put and call writing is there. So it indicates probably a consolidation, but its option data will keeps on changing, and still the decay is not coming in 4 more days. But remember one thing, next week is again a truncated week. You have a holiday today, Monday, and then Friday is another holiday, so it's just 3 days of trading that's going to happen. So it can happen very fast. For just 2 days were left. Sorry, I said 4 days left for the weekly expiry. It's wrong. Just 2 days. Tuesday, Wednesday, and then 30 have an expiry. So yeah, so market is not likely to move as much as per the options bets so far. Things could change tomorrow opens, but Bollinger bands are showing a very wide range between the median and the upper and lower bands. So that indicates volatility can still be there until we see a squeeze in the bands. That has not happened. So another way of finding support resistance apart from the upper interest is to look at the technical charts and then try to see the technical parameters like the exponential moving averages, Fibonacci, the gaps, and previous lows and swing highs and all that. So that's what exactly we have done. So here's the Nifty daily charts. You can see that the first resistance will come in at 22,907. then 23,000 rounding number, then 23, 28, Fibonacci 61, 23, 154 is what Fibonacci 61 is, 23, 28 is what the 50 exponential moving averages, and then 100 exponential is that 23, 305, then 23, 621 you have 200 exponential moving average, and 23, 869 very heavy, 200 Fibonacci 50 and the previous swing highs. If that is cleared, it goes to 24, 226 and 2 and 334 where Fibonacci 38 and previous swing highs are all there. And the next previous high is 24,857. Remember 24,000 rounding number is also resistance. That's about that. Downside the gap is when major support is coming at 22,252, 54. 2340 Fibonacci 78 also getting access, and then previous swing lows at 21,743 and then 21,530 is where the supports can come in. All these levels listed down here, you can have a look at that. And similarly, the first resistance will be the previous swing highs at 52,000 major one. Before that, it has to stay stable above the 51,000 resistance. Right now, it just managed to close above that, but it has sustained that. So that's kind of resistance, man. 52,000 points for after that, 52,583 and 52,807. So previous resistance zones, and then 53,000 rounding number, right? Likewise, resistance side. So if the battle channel and a breakup from there could be huge. It could hit the 54,000 as well. Those levels based on that is mentioned here. DMA is exponential moving average, RL is rounding number, PSH is previous swing highs, gap is window gap, Fib is Fibonacci, VR is previous resistance, right? So have a look at that, correlate that with the open interest, and then place your bets for the weekly and monthly likewise. We'll just move on to see how the different sectorial indices performed. All the different major sectors are listed down here, the IT, metal, auto, pharma, FMCG, and reality. You can clearly see that it is really hit bad, and then it's in the bear zones on weekly. While metal also gets bad, but it's still maintaining the sideways momentum. Even the auto is also hit bad and then falling down towards the top bottom of that panel channel. Still trying to maintain that sideways momentum. Pharma is also maintaining the sideways momentum. We can attempt to see in all of these four what we discussed. FMCG was a good recovery and very solid bullish candle. We also see that wide range bullish candle can be seen there, and sideways movement. So all these sectoral indices are maintaining the sideways. Reality is hit bad. It's fallen to the bear zone. So IT, reality, and auto really hit bad. Has to recover more. And other three, from FMCG and metal, is in the sideways, but sideways and falling kind of. So the sectoral indices, few of them are still to recover. It's the bear zone, something you have to keep in mind. But it's what happened last week. Previous week was really bad, where every single sector got hit really bad. 9% was what 90 went down. Now it's another 2.2% after recovery. 2.2% further down this week also the IT. Metal also another 3% down this week, even after the recovery. And then only sector, others are all flattish. Auto and pharma were flattish closes, and reality is again another 4% down. So IT, reality, and auto is in bad shape. But FMCG did a good show of it, forming a bullish wide range engulfing candle with a 3.4% up move, and still it's not ready for taking any long questions. But yeah, that's the best performing asset now. But yeah, except impersonation of the momentum and the trend in the charts are not that great looking. Now, another way of studying whatever the market, how bad or how good is the market movement is to understand the heavyweight stocks and contribute maximum to the sectoral indices. The HDFC Bank usually has slipped sideways, is unable to sustain the move, but formed a very good green candle. And also broke that channel almost, and then quick recovery, big buying has happened, and then there is a moment of divergence and very likelihood that it can move further up from here. Now that it has hit the bottom, and it can be a huge reversal up from the lands. Last opportunity to buy properly. Momentum is maintained sideways in HDFC and Reliance also. ICICI Bank also slightly slipped from those zones, but good recovery, candle greenish. So also likely to move between the sideways and the bull zones. Two banks so. both the two banking stocks and Reliance are doing okay. So the stocks, what has really hit bad is the IT stocks in FI and TC, which is one of the best ones, and then even though the recovery element has come in, it's still not good enough. It has got beaten down really bad. The IT stocks in FI and TCS. Kodak Bank once again doing good recovery after right for. FMCG has done good, and the pollution engulfing is in the ITC. So everything is good except for the IT stocks with respect to the heavyweight. So IT is what is hurting the index. Right? Even the sector index is also IT is beaten down really bad, and FMCG is doing good. It's a different stock. IT and FMCG and pharma, that's what was holding the market always. So that's not happening. IT has got really beaten down. FMCG is doing okay, pharma is doing okay. So that's the story. This is exactly what is happening. Now if you look at the broader markets, we see that it's recovery, solid recovery, green candle can see on mid cap and small cap indices, and market is trying to maintain that momentum, the sideways, and climbing up with a range shift concept on the momentum RSI. So that's very positive. That's very positive that broader markets are also showing equal green recovery attempt last week along with the major indices, and it has got a range shift also. So the leading is domestic institution buying primarily. So this is for the FIS and AIS analysis coming in. We see that 21,000 nearby, 21,000 crores of buying, selling has happened with FIS. FIS are selling. They continue to sell with the brief buying that happened 2 weeks back. They continue to sell like hell. That's what causing damage to domestic institutions buying equally and more. 21,950,000 crores more additional than what that's where market is sustained, and the only recovery happened is because of the domestic institution buying last week. The long derivatives for the FID also has gone down despite the fact that the market is close, flattish. So FID and derivative side has moved down. The fear and greed index is high, so given all of that, so institutional high selling continues is really bad news, and obviously it happens because of the pure global cues. So let's study the global markets. The mother market primarily, the US indices, the currencies, commodities like gold and oil and all that. So some currencies fallen down from, it seems like it has lost the 100 mark also. It's at 99.44, which is good news for a emerging market like ours. Now the US dollar currency pair is flattish but down in 5.93. So again, the rupee not good enough, still weak rupee is what you see. Now the crude oil has breached the 60 mark and it's been falling like anything. It's 30% fall something. Yeah, 32% of fall from the single high. So which is again good for an oil importing country like ours, but yeah, so that's it. But it's not reflecting the oil price for the ordinary citizens is a reality. But for the economy, oil marketing companies are definitely not good. But oil importing country like ours, for the economy, it's maybe positive. Gold is all-time very close to the all-time high, right? Although it did see close to what happened last week, it's a very all-time high. It's 33,227. It's dollar. It's a dollar, and gold is an all-time high. It's always a fear that it gives us a fear that it may probably be a shift in the money from the equity market into a safer haven. So given all of that, well, otherwise, gold is crude, both major commodity items, crude and gold gold is a hedging instrument, it's fine. Crude oil falling down as a US economy is fine. We'll be gaining something. So everything looks okay in the dollar, in the commodities and the currency space, but in the US market, the mother market, that's where the trouble and the drama is happening. Look at this. Drawdowns. What kind of move? Peak falls and then quick recovery. All in a week's time. And one day 5% down, next day 10. It's not 5%, probably it's more than that. It looks like it's a 5,000 point up move and down move. More than that. Nasdaq all the same. They all had a similar fall like those and similar recovery, right? And all of them have fallen to the bear zones on the medium term weekly charts and then quickly climbed back to the sideways. Exactly like how it happened for us. So US markets is showing volatility, our market is showing. Globally, all the markets is showing volatility. We don't know why it is, but end to end, US markets close green. Right? there's a mistake there. US markets, yeah, alright, that's fine. So US markets are close green, right? It's a 5% to 7% to 5% 6%. So 5 to 7% of green can be seen in Dow Jones, Nasdaq, and S&P 500. So overall US market is green back after a very volatile dip and reversal. So overall, well, US are good. That's what I would say, except for the volatility that happened last week. People anticipate since the VIX is high, whether this volatility continues next week as well. That's a fear that's left behind. Although net to net, if you see, global cases are fine as of now because after the pause of the tariffs. And to action for the next week, so our industries is, of course, it's our base company. It's in momentum is bullish, trend is bullish, so it's okay. Flag pattern is there, and then good risk reward of 1:1.5 to 1.2 can be looked at. That was put in last week also as a stock pick for action. It didn't know much, so this week also there is a possibility that it can break down further from here for a 1:2 score. It's a descending wedge, and a breach of major support has happened, and momentum trend is in gears also. You can place a bet with type stop losses. Remember, these two recommendations are not these two stocks analysis are not recommendations, is what I want to say. I do not recommend that you trade this unless you are convinced with your technical study and you have the risk appetite required to place a bet, and you do a bet or don't do a bet. It's up to you. I have nothing to do with. This is just a case study or a technical analysis study that I present before you for my purpose, and I may or may not trade on this. Right? It is just to make you understand how do I make stock picks, how do I do the analysis. It's a learning purpose behind that. Similarly, I have enough to understand that next week it says reverse jade lizard, right? That's what they call it. Basically, you're selling put and call, right, which are OTMs, and then you hedge it on one side. So downside, you have very low risk. So here, if you see, make profit after 23,500. As long as it's as long as it is, you don't make any loss on the downside. Right? As long as it does not cost the 23,500, you don't make loss. Capital requirements are comparatively less because one side is hedged. Profit is good. Risk reward is also reasonable enough. Okay? And that's the way to play it. Basically, you're selling 23,300 put and then 23,450 call. Or a lot or 100 lots or whatever you want. And then you're hedging for equal quantity on the put side only. So put side is covered. One side covered, other side not covered. Where's jade lizard? I'm sorry, sneezing. Okay, let's try to wrap it up. So it was a nosedive of 5% reversal immediately. V-shaped recovery definitely, extending the correction to 17.3% now. FS current sell-off. Lovely poor cues are there. VIX is rising in about 20. Fear is still there. Market did recover, but fear is still there. That's a nutshell. So beware of that. Let's try to put together different factors in favor of the bulls and bears. US market is green. Recovery has happened there. Option futures on Friday. Futures Friday OI looks good. When the bands looks consolidation, not in bear zones or expansion and downside. It's not there. It's consolidation sideways, and Banknifty is even bullish bias timing. The moment is sustaining sideways, not mediating the. I'm talking of the indices, and heavyweight stocks are also sustaining the momentum, except for the IT stocks. We talked about that. And Banknifty is about 20 and 200 exponential moving average with bullish bias on one of the bands. As I said before, candlesticks are all bullish wide range, very wide range. So sideways can be expected, but bearishness below the low of that is not likely in next week. Unless another big bad news or big announcement like that if it comes, just like how we had done last week, Trump had done. Okay, so hope that doesn't happen now. It's a cool off at least for 3 months, and the dollar is falling. It's also good to look at the broader market indices also shows the recovery. So overall, these are the things that you can put in the bucket of the bulls. In the bear bucket, you have the FIs that continue to sell, which is rising about 20. Trend is bearish still. IT sector is really bad. Options OI is PCR is bearish for both indices below 1, and gold is at very all-time high. Right? So that adds up to the fear. If it is below the 20 and the 200 exponential moving average, and major sectors are half of them are in bear zone still. So there are factors in favor of the bear. So yeah, the global views of the US dollar is really concerned as of now. Fear of a recession and all that. You know? So you have to be cautious about that. So overall, you know what happens. You know what can be expected. You have to be cautious. So Briggs is clearly telling us, be careful. Right. Global views are not that great. Anything would happen. Can be very volatile. Briggs is there, means just have to respect that until it cools off, and that's the thing. That's a big prediction or whatever we call for the next week. Briggs is really cool. Voltage is really bad. Things may go out of hand, especially if you're trading derivatives. So save the format for amateur and if you're personal, so reduce your quantity and play it safe and hedge your versions above all. Right. Technical charts, as I always say, is only a possibility study of resistance and supports and not a confirmation, especially when there are black swan events like what happened last week. It's kind of a black swan. When an announcement of 100% tariffs and 200% tariffs and all this, it's similar to economic war, similar to a war. Right? So such black swans, take away all the technical analysis for a toss. Keep that in mind. It's just a probability study. It's better than not doing any study and then blindly make a bet. This is a study of the human psychology where people could possibly probability. That's all. Keep that in mind. So next week range is 22,000 and 23,500 plus 100 point range for the Nifty and 49,000 and 3,000 for the Banknifty. But 26,000 and 54,000 is quite far away. So until that clear, we may still be correcting or we may be consolidating. Right? So always protect your capital. That's all you have. Risk management is what trading is all about. Always hedge your portfolio, hedge your positions as well. And also use hedging positions using options to make some money. Rental income, like some of the starts explaining in the playlist. Check out that. That's all I have. So if you like the content, you can subscribe and again hit the like button and put your feedback and all that and share it to others so that I have some subscribers. I'm also active in XNA on a regular basis. There's a weekly one, but I do post technical charts and all the stuff on X. So if you want to subscribe that, you can do that as well. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.